Good morning, everybody. Happy Monday. And I wanted to give you some thoughts on a few things that are not going to matter for financial markets this week. G7 meeting comes and goes. We continue with this ongoing battle within the G7 over how to deal with China. This inherent conflict between commerce and morality will exist and continue to exist. And frankly, there's not a lot of good answers to how countries deal with this, because a country like Germany, where China is its largest trading partner, still has very, very long-term and strongly held views in regards to labor abuses, human rights abuses, and the like. And frankly, these wishy-washy statements that come out of G7, particularly in regards to a potential rival to Belt and Road, which I think politically is dead in the water in the United States, are not going to truly get to definitive answers. And I think we're going to continue to be in this what I call a moral muddle between continuing to engage with China and deal with and accept all the economic benefits that come from dealing with China, and yet to some extent countries who claim that they have a strong moral compass are going to have to turn a blind eye to some of the more nefarious things that go on within Chinese borders. So the G7 comes and goes. It doesn't really matter that much. You had some interesting commentary in regards to removing state subsidies on coal, which I think is a wonderful thing from the climate agenda. But big picture, the G7 comes and goes, and again is more hype than rhetoric. This week we've got the Federal Reserve, which again should be a potential non-event. I did read before that the JP Morgan and the like are coming out and talking about maintaining a hawkish maintaining views on interest rates moving higher after what was a pretty remarkable week in US fixed income in particular, which was a complete rejection of every sizable inflation print that we have witnessed. Clearly, the market and the Federal Reserve are completely on board with this, and I wrote about this at length for the View from the Peak clients about this ongoing melding or meshing of a consensus between what the market believes and what the Fed thinks is going to happen in regards to inflation being transitory. It's been a while since I've seen something which is more consensus than that. Doesn't necessarily make it wrong, but it certainly is consensus. And I suspect that talk, particularly in this JP Morgan piece that I read, stating that the Fed could come out with something hawkish, again, the rumor mill going into the Fed meeting will be in full force, as it always is. JP Morgan has no edge here. I have no edge. You have no edge. And we just going to sit there and wait for Fed commentary. But remember that we are going to be looking at this Fed commentary in the context of this remarkably dovish attitude by the Federal Reserve, and that they have been able to convince the market at large that the rather lofty inflation prints that we are seeing are going to be transitory. The market is well and truly on board with that. And the reality is that if you do get something hawkish out of the Federal Reserve, it will be a surprise. But JP Morgan have no edge here, and none of us actually do. The one thing I want everyone to look at is a chart of the renminbi. Now, I believe that the renminbi is the most manipulated currency on the planet. I think there is no doubt about that. And the PBOC over the course of the last couple of weeks has made it very, very clear that further renminbi strength was unwarranted. And again, I'm an amateur chartist at best, but we are clearly seeing a breakout after a downtrend in the renminbi for the last couple of months. And I think potentially we could see some upside. Now, you asked me long term, do I think the renminbi strengthens? Yes, over the course of the next several years, I think that the renminbi trades well through 6 and probably heads to 5.5, because that is in line with the dual circulation policy and more inward looking China that was alluded to in the 14th five-year plan. But tactically, this looks like the renminbi is going to weaken against the dollar in the near term. So, guys, take a look at that. I know that goes against the structural views of many of you, particularly me, but it's certainly something worth looking at. So, guys, I'm going to come back and be doing these every day. Hopefully, they are of some value, and if they're not, please let me know. Thanks so much.